All right, guys, welcome back to Larry Buys Houses. We're doing the Money People Deal preview. This is the framework. We're going to be doing this workshop here on November 22nd. And so running up to that, I've got 30 quick things to talk about as far as like habits, skills, daily disciplines in real estate. And yeah, tonight I'm going to show you how to train like an investor, not just study like one. So really, the same mindset that a lot of the successful people are using to turn these daily real estate reps into real cash flow. So you don't need ads, you don't need luck, you need these consistent repetitions to find deals. So let's jump into the first section. So just like fitness, if you skip leg day, your foundation is weak. And in real estate, if you skip daily leads work, your pipeline is going to be empty. So for each of these little tidbits I'm going to give you, they're going to fall into these different rep categories: finding deals, making offers, talking to sellers, following up, raising money. So these 30 habits are going to be your training program, your investor, your investor workout plan. So let's start at the top here. Number one, here it is. So why am I not finding deals? If you still can't find a deal, no matter how many listings you've checked, here's how you'll spot one within 24 hours. Pull the 10 tired listings from MLS. This is over 60 days, 90 days, these old listings. And you can call the realtor and ask, has the seller had any offers fall through? When you hear yes, you want to offer about 10 to 15% below wherever they're at. This is how you can test whether or not they're negotiable. Okay. Rep number two, how many offers should I make in a week? So here's why offer count determine your paycheck. Real investors track offers like reps in the gym. 10 reps a day, 10 offers a day, that would be ideal. Verbal offers, written offers, that'd be great. But within those 7 days, you're going to learn a few things. You're going to learn prices, you're going to learn speed, what's going on, and you're going to find out who's motivated. So I've got a daily tracker that I use for my offers, as well as in my phone with my hit list. These are the things that I'm tracking offers. You need to start tracking how many you're making. Number three, people are saying the market is too competitive right now. Yeah, if you think the market's too hot, you're missing the real game. Competition kills lazy leads, not hungry ones. They're still out there. So we need to go where others won't. These are the 90-day-old listings. These are probates within the city. These are small town agents. These are outside retail agents that might not have something, but this is where we're going to be calling them up, reaching out, asking about maybe something they have, but really getting into the conversation about asking what else they have coming up. This is how we intercept the market when it's too competitive. Number four, what's the fastest way to get your first deal? Well, most beginners waste months learning. Here's how to lock in a deal in about 8 weeks. Week one, the first 2 weeks, 1 and 2, we want to build a buyer's list so we have somewhere to actually sell these things. Week 3 and 4, this is where we go to the market calling realtors. Call those 50 realtors each week. That's 100 realtors. You're going to find something. In week 5 and 6, after you've kind of kicked the tires on a bunch of stuff, we want to start making those offers 10 a week, 20 offers. And in the next following week 7, week 8, this is where you're going to negotiate those leads that you were able to generate in week 5 and 6, that you will be able to negotiate, assign, and close. Very simple 8-week roadmap. You'll understand that all the components are there to actually find something and assign something. So number 5, how do I talk to sellers without sounding salesy? Well, we need to stop pitching and start helping. So asking these 3 questions will be huge for that. What's making you want to sell? Finding out the motivation. Number 2, how soon do you need to sell? Finding out the timelines, what's already in their head. And then number three, putting it both together. If we handled that, or if I handled that, would you take X? And so rapport ends up being way bigger than some sort of long-winded script because we're finding the motivation, the timeline, and if we were able to get rid of those problems for you, would you consider the offer? Number six, where should I start with wholesaling or rentals? So here's how to pick your wealth path. If you need cash, wholesale. If you need wealth, we want to hold. Start with speed and then graduate with freedom. That's where you're buying things slightly under market, you're finding them off market, but you're building that thing up over years because you don't need the cash now. Very common. People get this misconception. Do I need a license to wholesale? It's changing a little bit in some states in the United States. However, you don't need a license, you need disclosure. And this is really important. You can do all the assignments you want as long as you stay compliant. You make sure that you're marketing contracts, not houses, and you disclose your intent in the contract, giving you the right to assign. We don't want to be brokering deals without actually having a contract to market. We don't market houses, we market contracts. So, this is something you really want to save in your head as far as how we stay compliant. We are selling contracts, not houses. So how much money do I need to start? This is something that holds a lot of people back from even starting, is thinking that they need money to start. You can start this business with $0, but not zero effort. Use time as currency. Pull free listings, call agents, find some money and joint venture the deal. You don't need any money to start doing real estate investing, but you do need the effort. Big question a lot of times when we're starting in real estate, we're building up our beginning here, we get to hear about the BRRRR method that everyone's always talking about. That's the buy, renovate, rent, refinance, repeat. So what you want to think, and people get confused, they think it's a strategy, but all these things like wholesaling, flipping, rentals, refinance rentals, these are all exit strategies to an acquisition of a deal. So when you want to think about a refinance, a buy, rent, refinance, or a BRRRR method, think flip to yourself, rent it, refinance out the money that you can to still maintain some cash flow and build that long-term wealth while getting your seed capital back to do it again. Now, how do people find private money? This is part of the triangle, money, people, deal. We need deals, we need people to fix them, and we need money. So money is not found, it's attracted. So one thing that I always put out there for people who are trying to raise capital is you got to be showing the marketplace. This is on Reels or on your social media or even with conversations with friends, is we need to be talking about the deals we're analyzing so they understand how we look at things. Messaging them to 5 different friends is a great way to get started. Hey, I just did this reel about this house and analyzing. What do you think? And so when we're looking at that, this is where we can start then going, if this was a real thing and the return was this and I handled everything, would you be interested in something like that? Do you want to see that plan? And that's the attraction. We're putting it out there that we're doing it, inviting people in to join us. Now, you're making tons of offers, you're doing all the business that you are here, starting from nothing and growing to wherever you're going. How do you know if it's a good deal? Well, if you can't explain the profit in 30 seconds to someone, it's not a deal. If you have to tell a story that's very long and you have to really talk about this, that, and the other, it's probably not a deal. The easiest thing is to just go by the standard after repair value, 70% of that minus your renos, which is about $30 to $35 a square foot. And that'll get you your max allowable offer price. When you practice that on 10 different listings, you'll see pretty quickly that it's fairly simple to look at something and say, they're way too far, they're never going to be a deal. But this thing might actually be negotiable to make it a deal. Now, typically when people are looking to invest, they're coming in to the make more money crowd. And that being said, they're like, can I invest with a bad credit, no credit? Well, bad credit isn't a wall, it's kind of a filter. We need to start partnering with people that have credit. You bring the hustle, the deal flow, and then you're going to be splitting the profits until you can catch up on kind of your score catches up where you can start financing maybe some of your own deals. But early on, we need to start partnering with people that have that credit so we can start participating in the better and better loans. Number 13, what if I live in an expensive city? Well, you don't necessarily need to live where you invest. You know, remote wholesaling is a thing where you call, lock up a deal, assign it, and really focus on those mid-tier markets around the 400K. You know, you look at British Columbia, you look at Ontario, you look at some markets in the United States, and they're just way out of proportion and it's too difficult. The juice and the squeeze is just not a thing. But you can always find in and around those areas that 400K marker. I'm not a huge proponent of remote wholesaling. I think you can find everything you need in a small market or in your own backyard. It's just a matter of looking harder and believing that it's out there. It's too expensive. It's all just percentage based. You know, the after repair value times zero point 0.7 minus the square footage will tell you if this thing at 1.3 million is still a deal if it could be bought at like 850 or something. So it's not so much as an expensive city. There are other things, but you can find it in your backyard. Now, how many calls should I make per day? This is for the reps that we're doing as far as making our calls. 5 calls a day keeps the business moving because you're going to make those 5 calls and another 5 calls and in a month you're getting close to 150 calls, maybe not on the weekends, maybe you do 6 calls, 7 calls a day. That's not that many. Probably take less than half an hour. A lot of voicemails, a lot of callbacks, but that's a structure that's going to create that deal volume that you're looking for just by reaching out and touching these agents who are working 40, 60 hours a week in the business. You only have to connect with them to participate in their pipeline. Now, how do I negotiate better? Coming into this, maybe you're from a job or maybe you've never really had to negotiate. The biggest thing that people I think make a failure on is really that silence is what closes deals. When people ask a price and then pause and let the person fill it in instead of starting to ramble and continue, that's really where the deal's made. And then after they've said something, the person who breaks first is the one that's going to, be under the control of the other, negotiation. After they say something, you say, is that flexible? You know, simple beats slick a lot of the time. You can say a bunch of fancy stuff and have a bunch of objection handling, but silence is a great starting point. You can be terrible, but as long as you don't talk too much, you can certainly make a better negotiation out of something that if you rambled on, probably will ramble your way out of a deal. So what's the safest way to start in real estate? Well, safety isn't hiding from the market, not watching from the corner. It's about preparation. When you're looking at the business, there's the acquisition, and then there's what's called exit plans. So whenever you're looking at things, you want to be looking at these different exit plans. Is this a wholesale deal? Is it a wholesale deal that I'm selling with a realtor? Is this a flip for an investor? Is it something that's going to be rented? Run the offers for each of these kind of things and find out which one's going to make the most sense. I always go for the flip because then I can always work my way back up. Flip, wholesale it right at the beginning. If you find a great deal, you can get rid of that. But then you look at it and say, okay, well, maybe it's a little bit thin, but I could still make money flipping it. Well, it's a little too thin for a flip. Maybe I can rent this thing out and get it for a discount. Well, it's not the greatest discount, but a retail buyer would be interested, and I can wholesale that out to someone who's just looking for a great price on a great property in a great neighborhood. So what tools should I use to start doing real estate? Well, you don't need fancy tools. You need daily habits. Google Sheets for tracking, the business we're doing here, we're chasing leads right now. It's all in Google Sheets. Just staying organized. Realtor.ca is the master listing for all of the leads. If you're in the States, Realtor.com, Zillow, whatever. These are all people who've put their hand up and said, I want to sell. And then ChatGPT can help you with scripts. You can write some, you can train with it, you can do the conversational stuff, go back and forth. If you're afraid to call agents, make a fake real estate agent and have some conversations with that before you jump on the phone. There's lots of tools, but ultimately the best one is going to be the phone. If you're not using your phone, you're probably not in business. So how long does it take for these things to start clicking in as far as real estates? Well, most people quit before it actually works. They think they're going to be able to do something like this week or next week, but the average first deal is usually found between day 45 and day 60. So if you stay consistent, focus on the process and not the payday, you'll start to make things happen. Having a wholesale deal closing in 2 months is great to know that it's closing in 2 months, but what about now? And getting back on the horse, putting another one on the pipeline. Now, a big question when people are starting is, do I need an LLC or a corp to start? Eventually, yeah, that entity panic can kind of stop you from doing anything at the start. You're like, I'm going to do something once I get incorporated. And it's like, cool, but you may be incorporating for nothing if you don't like real estate. So close your first deal, do the paperwork, assign it under yourself at least once, take that money, use it to start incorporating. There's nothing wrong with doing your first one without getting all technical about it and, signing up a corp or something like that. Now, buyers, this is the big thing. Like, okay, we've found some deals, we know they're deals, but who are we going to sell them to? It's always a buyer's first mentality. I don't go hunting for deals. I go hunting for deals that my buyers have asked for. That may lead me to buying a grocery store or something, but I'm looking for what people are looking for, not what I think people are looking for. So joining Facebook groups, something like Winnipeg Investors or something like that, or calling the We Buy Houses signs you see when you're driving around and just asking them, what are you buying next? Build that list of people and things before you go out hunting. You might capture a bunch of stuff that nobody really wants. Now, sometimes when people are starting, they're like, should I have a partner or should I go solo? And the truth of the matter is that two people can build a business faster if they stay in their lane. So the best strategy is that you split the roles. One person's doing the deal finding and the other one's doing the assigning, the paperwork, and agree beforehand on the exit and the equity to see where the money's going to go before you have to start talking about where the money's going once you do a deal. Make sure you set that framework up at the beginning because that first money conversation can kill your partnership. Okay. Number 22, how do I manage risk? Okay, real estate risk is just uncalculated math. When you're looking at it, run your worst case return on investment scenarios and make sure that you still have that 10K profit. If not, pass. Because if there's still a little profit as an investor at that point 0.7 mark or that 0.75 mark, there's people above you that have smaller margins that'll happily take that deal off your hands. So now that we've talked about all these things, let's talk about what makes an investor fail. Well, it's not a lack of money, it's a lack of follow-up. They'll get a lead, they'll just focus on that one follow-up. Really, it's to really have that second part of your business where the fortune really is in the follow-up, making the calls with the agents. They don't call you back, call them next week and staying on that schedule, just like Jim sets. Don't give up on the calls. It's just a matter of time before something cracks through on that. It's all in follow-up. So should I pay for ads? This is why, the main thing about what we're talking about here. We don't need to be paying for leads that won't call us back or have they want like full ARV retail homes. Well, we can wholesale those networking with agents, people who are dealing with title issues like foreclosures and lawyers that have those sort of title issues or other wholesalers. If you build those relationships, it's going to far outpace any sort of ad spend that you're going to be doing. If you're busy and you have no time, but you have money, yeah, go for the ad spend. But a lot of us are on the time over money. And this is where we can invest in our time out so that we can get that organic deal generation strategy going. Maybe down the road you can buy some ads, but I bet with the proper network, you're not even going to be thinking about it. So let's talk about the best marketing channel. We're talking about how to get leads here. So the best marketing channel at the end of the day is the one you use every day. So pick one. Is it making calls? Is it dropping off letters? Is it social DMing real estate agents? Track the inputs, not the results for 30 days. When you're putting these things, you just want to be like, okay, I sent it out, and you're going to see eventually, if you just do a little bit of sprinkling, two things are going to happen. One, you're going to find out what you like doing, and two, ultimately, probably what you like doing is getting leads. So you're going to focus on the one that's actually working for you, whether it's social, whether it's letters, whether it's calling people. You'll figure out which one it works for you, because at the end of the day, it's the best one is the one you can do every day. So now that we have like a strategy for what to do every day, how do I stay motivated? Well, your energy is going to drop when your vision of what you're looking for fades. So write a little thing down, put it, stick it on your mirror, anything that you look at every day, like right next to your light switch when you're leaving your bedroom or whatever. Why I invest. Look at this before your day. Look at it before your calls, because the discipline and that reminder, the discipline's always going to beat motivation. Discipline begins when motivation ends. And really, you can get motivated up and down as you go, but really that baseline discipline is what keeps you from falling out and, going back to whatever you're doing or just quitting real estate altogether. Now, how can I invest while working full time? At the end of the day, it's the 9 to 5 deal. You have a lunch break, do some calls. After work, before 8 o'clock, do a few calls. On the weekend, set up some walkthroughs. It's the same thing like if you had a t-shirt business or something like that. You'd be working in those other spaces. They call it the 9 to 5, the 5 to 9. And if you put it all together, you'll quickly see that that work done 5 to 9 is going to be making you question that 9 to 5. So how do we pick a market? Well, I'm a big proponent of your backyard. The first market should fit your phone bill, not your ego, in the sense that about 3 hours around where you are, where the average home price is about 400K and job growth is up, that's your sandbox. It's not going to be core Toronto. It's going to be 3 hours around. It's not going to be core Vancouver. It's going to be 3 hours around it. And if you look at that edge around it, you'll see that that 400K all of a sudden starts showing up. And this is where people can affordably move property. And there's a lot of velocity in that space. Now, as we get to the end of the list, people say, well, real estate is risky. Yeah, everything is risky until you learn the rules. Knowledge turns that risk, that fear, into a return on investment where you can read, network, and run those numbers daily, stay on top of what's happening, and that's going to reduce the risk. Is it ever going to be gone completely? No. But the reality is that if we can mitigate the risk with research, that's where we're going to be able to pull the trigger. And so number 30 here at the end, how do I scale after my first deal? All these things we did and we got all the way down to, so how do we scale? Well, one deal, and this is always a huge breakthrough for my students, one deal proves it's possible. And then systems implement it, make it predictable. Document how you got your first deal, document your calls, who you're touching base with, start developing some scripts and some templates, the spreadsheets to help you track it. And eventually you might have to hire help, for what are the things that you maybe don't like doing, like organizing your database or dropping the flyers. You know it needs to be done, but maybe it's just not for you. Use some of that first deal money, double it down, scale your business, and keep it consistent, because we want a predictable system so that we're closing deals every 14 days, 21 days, 30 days. That would be ideal. Okay? So we ran through all those real quick so we can get a big baseline here. And so let's talk about training pillar number 1. If you pull the lessons from up top here, we want to teach people how to first find, and these are lessons like scripts from the first 1 to 4 or number 11, number 14, 20, and 28. These are the things that will allow you to find the property, offer on the property, maybe get rejected, learn, repeat, and eventually get down to that thing where you get to that light bulb moment where you realize that you can write offers without putting any of your own money in and some of your own time, and maybe even get agents doing most of the time work for you and get these things coming to your phone instead of you having to constantly reach out. When you realize you can write no money down offers and control a property with nothing down, that's when it clicks. You say, I can have infinite lottery tickets and just keep writing them and writing them. So how many offers? You got to think. You say, how many offers have I written this month? And if it's, one or two or five, it's November the 12th today, it should be somewhere towards 12, at least one a day, two on one day, none on the other. Eventually, you're going to get into that thing. You want to be treating deal finding like a workout. 10 reps a day, 10 calls a day, 10 flyers a day, something of what we talked about 10 times a day. Because when you look at the result of a real estate transaction, speed is built on consistency, not intensity. You look at a 100-meter dash, if it's a 500-meter thing, the person who knows how to run 500 meters is going to outpace the 100-meter dash person because it's not about speed. It's about being able to have a consistent speed over the lifetime of that deal that you're working on. Training pillar number 2, finding people. So if you pull from number 5, number 10, 12, 21, 24, and 26, you can look at it and you can say, well, why can't you grow faster than your network? Typically, the relationships drive that lead generation. It's not so much that you're going to be able to do more closed off from the network, but that when you open yourself up to the network, you're going to have more than enough things coming in. You're only one phone call away from your next money partner. If you're doing those outreaches, you're only one call away from finding your next deal if you're calling the agents. So money flows to that momentum, that regular 5 calls a day, 10 calls a day, whatever it is you're doing, 10 flyers a day. The phone's ringing, people are coming in, you're having conversations, things are moving. Momentum comes from the people you're connecting with, not how much money you spend on ads or whatever you're doing. It's that you're continuing the momentum and the consistency. So you want to think to yourself, who's one person in your phone, in your Facebook Messenger that you could reconnect with tomorrow who's already in the game to help you open up that opportunity in that lane. Now that you've found deals and you've found people to connect with, let's talk about how do we find the money. So that's number 8, number 10, 15, 19, and 22. Money is not found. Again, it's attracted to us. When we're doing the money people deal, if you have the deal and the people, money wants to work with you because you've got it mostly sorted out. All you need is the money to ignite that deal. If you can't explain that deal in 30 seconds, the profit's probably not there. If you have to tell a long-winded story, you probably don't have a deal. You have something that you're, making bias and you're making it a deal in your own head. And quickly you'll find out that those investors that were so excited to work with you and invest with you, they didn't get money because they don't know what a deal is. So you're not going to be able to pull it over on them. You got to have a deal and you'll get the reaction from your investors because they're going to want in. If they clearly aren't wanting in, that's clearly not a deal. So what, think to yourself, what would change if you practice your pitch daily instead of waiting for those calls to try to make sure that you're doing it right? Maybe practicing your pitch in the mirror is a good idea. Now let's talk about the action plan. Your real estate business is built on reps. Every call, every offer, a connection is a rep that builds strength, that builds the opportunity. And the real business that we're in is a networking business. I firmly believe that most business is networking, and then there's some sort of transaction that's going to happen. But if you're not connected, are you even in business? So from all the things we talked about, pick one of these reps and start implementing it tomorrow. Don't wait until you're ready. Just train. If it's too heavy, lift lighter. If it's too far, run shorter. But start. Train until you're confident with it and then scale up. So we're going to be doing that Money People Deal Framework class November 22nd from 9 to 5 here in Winnipeg on the 22nd. We're going to be going through this over the whole day. Really, it's just money, people, deal. And if you can put that together and realize that you're not the deal, you're not the people, you're not the money, but being able to put them together, you can line up as many as you want. There's really no limit to the scale. There's only a limit to your ability to, you believe that you can actually put money, people, and deals together. So I'm going to go to deal talk with the rest of the room, and we'll see you guys November 22nd at the Money People Deal workshop.